You've been lied to your entire life. You've been told that debt is a dirty word, that the path to financial freedom is cutting up your credit cards, and that a paid-off car is the ultimate status symbol. I'm telling you right now, that advice is keeping you broke. While you're busy celebrating being debt-free, the wealthy are borrowing millions to get richer. The difference isn't luck. It's that they understand one simple game that you are refusing to play. Today, we are dismantling the banking system's greatest trick, convincing you that all debt is created equal. It's not. There is poor debt, which enslaves you, and there is rich debt, which builds empires. If you don't learn the difference, you will spend your life working to make your banker wealthy instead of the other way around. Let's start with a hard truth. Your local bank is not a public service. It is a business, and you are either the customer or the product. Most of you are the product. When you walk in to deposit your paycheck, you think you're saving. The bank sees a wholesale loan from you. They pay you, maybe 0.5% interest if you're lucky? Then they turn around and lend that exact same money back to you or your neighbor for a mortgage at 7%, a car loan at 9%, or a credit card at 24%. This gap is called the spread. The bank is the middleman selling money to you at a markup that would make a drug dealer blush. You are essentially selling your money to the bank for pennies, then paying them dollars to rent it back. That is poor debt. Financing your lifestyle with money you could have just kept in the first place. You are voluntarily shackling yourself to their profit margin. Ask yourself right now, are you making the bank rich, or is the bank making you rich? If you have a savings account earning 0.4% and a credit card debt at 20%, you are voluntarily donating your future wealth to a corporation. Here is where most people crash and burn. Poor debt is used to buy liabilities, things that go down in value the moment you swipe the card. Let's look at a concrete example most of you are guilty of: the car upgrade. You finance a $50,000 truck. The moment you drive it off the lot, it loses $10,000 in value. You are now paying $800 a month for 5 years on an asset that is rotting in your driveway. You can't afford to lose that money, but you can't afford not to pay the bank, so you stay in a job you hate. That is a cage built of debt. Or consider the vacation trap. You put a $5,000 trip to Europe on a credit card because you deserve it. If you only make the minimum payments, that trip ends up costing you $15,000 and 10 years of payments. Is that beach view worth a decade of stress? Stop asking, what's the monthly payment? That is the language of a slave. Ask, what is the total cost? If the item goes down in value, never borrow to buy it. Period. Now, let's flip the script. How does the wealthy class use debt? They use it as rich debt, a weapon to acquire assets. Let's look at real estate leverage. This is the classic example that built this country. Say you want to buy a rental property worth $200,000. You don't use your own cash. You put down $40,000 and you borrow $160,000 from the bank. Now here is the magic. If that property goes up in value by just 5% over the next year, the property gained $10,000 in value. But look at your return on your cash. You made $10,000 on a $40,000 investment. That is a 25% return on your money. You used the bank's money to control a large asset, and you captured all the upside. The bank takes the risk of the loan, you take the reward of the appreciation. That is rich debt. You are using OPM, other people's money, to get rich. Poor people borrow to consume. Rich people borrow to produce. Which side of that equation are you on? This is the level the amateur finance gurus never talk about because they don't understand it. The wealthy don't sell their assets to buy things, they borrow against them. This is the don't sell rule.
Let's say you have $1 million in stock that has grown over the years. If you sell it to buy a house, you trigger capital gains tax. The IRS is going to take a massive chunk of your hard-earned wealth. Instead, the wealthy go to the bank and get a securities-based line of credit. They pledge the stock as collateral. The bank lends them cash at, say, 4% or 5%.
Why do this? Because your stock keeps growing at 10% or 15% in the background. You get the cash to buy the house, you keep the stock, and you don't pay a dime in taxes because you didn't sell anything. You're essentially borrowing money at a low rate to let your high-rate assets run unhindered.
You worry about your credit score. The wealthy worry about their cost of capital. As long as the return on their investment is higher than the interest rate on the loan, they are making money by borrowing money. Banks are terrified of you learning this. That is why they spend billions on marketing rewards and cash back to keep you distracted with pennies while they steal your fortune with the spread. They rely on your financial laziness. They hope you see a 20-page mortgage agreement and just sign it. They hope you see the minimum payment due box and check it.
But here's the reality check. The banking system is not rigged against you. It is neutral. It is a tool. A hammer can be used to build a house or smash a thumb. Debt is the same. The wealthy have picked up the hammer and are building. The average person is smashing their own thumb and complaining that the hammer hurts.
The bank isn't evil. They're just efficient. They are efficient at transferring money from the financially illiterate to the financially literate. Which team are you playing for? Let's break this down. 1. Poor debt. Borrowing money to buy depreciating liabilities like cars, clothes, and vacations. You are paying interest to lose wealth. 2. Rich debt. Borrowing money to buy appreciating assets like real estate, businesses, or stocks. You are using leverage to multiply wealth. 3. The strategy. Stop trying to be debt-free if it means losing opportunities. Start trying to be bad debt-free while strategically using good debt to expand your balance sheet.
You are not going to save your way to a mansion. You are not going to budget your way to financial freedom. You have to learn how to use the bank's money to build your own empire.
If this video shifted your perspective, smash that like button. Subscribe if you want to stop acting like an employee and start acting like an investor. Comment below, what's the worst poor debt you've ever taken on? I want to hear your stories.